Imagine waking up one morning to see that a tiny company you invested in, something most people have never even heard of, has suddenly doubled in value overnight. At the same time, another investor opens their phone and sees that their shares in one of the world's largest companies have barely moved at all, but they're calm, steady, and confident. Two completely different experiences, two completely different types of stocks. And both can shape a person's financial future in powerful ways. That is the world of small-cap stocks and large-cap stocks, a world full of opportunity, stability, surprises, and lessons every investor needs to understand. Today, we're diving deep, really deep, into what sets these two apart, why some investors swear by one and avoid the other, and how you can decide which path may be right for your own financial journey. Before we begin, think about this. If you had invested early in companies like Apple, Amazon, or Netflix, you would have bought them when they were small caps before they were giants. But if you invested in them later, when they became global powerhouses, you would have enjoyed a different kind of growth, steady, reliable, less dramatic, but more predictable. Which type of investor do you think you are right now? A risk taker, chasing potential, or a steady planner seeking stability? Drop your answer in the comments. I'd love to know what kind of mindset you bring to investing. To understand small caps versus large caps, we first need to talk about market capitalization. It sounds complicated, but it's really not. Market cap simply means the total value of a company in the stock market. You calculate it by multiplying the price of a single share by the total number of shares. That's it. When that total value is small, we call it a small cap company. When it's huge, we call it a large cap company. Now, small cap stocks are like energetic young startups. They're exciting, fast-moving, full of dreams, full of potential, and sometimes full of risk. These companies might be creating new technology, opening stores for the first time, or expanding into new industries. They're trying to prove themselves. And because they haven't reached their full size yet, there's room to grow, sometimes a lot of room. But here's what makes small caps so thrilling and terrifying at the same time. Growth doesn't follow a straight line. A small cap can rise quickly, fall hard, jump again, collapse again, then soar beyond all expectations. It's like riding a roller coaster with your eyes closed. You know something exciting is happening, but you're not always sure what turn is coming next. Large cap stocks, on the other hand, are like experienced champions. These are the Apples, the Coca-Colas, the Googles, the Johnson & Johnsons. They've been around, they've built trust, they've survived storms. They don't usually double in price overnight, but they also don't crash out of nowhere. They move slowly, steadily, predictably. They pay dividends. They have global brand power. They have reputations built over years or even decades. So here's a question for you. Do you prefer the excitement of unpredictable growth or the comfort of long-term stability? Think about it and type your answer in the comments. There's no right or wrong choice, only the one that fits your personality and your financial goals. Let's go deeper. One of the biggest differences between small cap and large cap stocks is risk. Small caps often face challenges that big companies rarely worry about. They might struggle with funding, competition, or market trust. They might be affected more by economic downturns. Even minor changes, like a small shift in consumer behavior, can dramatically affect their stock price. That's why small caps are considered higher risk. But higher risk can mean higher reward. Imagine being one of the earliest investors in a small cap company that eventually becomes a giant. The returns can be life-changing. It's happened many times in history. The question is, would you have the courage to hold on during the uncertain early days? Large caps offer lower risk, but also lower reward in comparison. Their growth is usually slower because they're already huge. Think of it like rolling a giant boulder. It's powerful and impressive, but it won't move as quickly as a small pebble. But that boulder is also much harder to knock over. That's why many long-term investors trust large caps. They provide stability, dividends, and the confidence that comes from strong leadership and long company histories. Liquidity also separates these two categories. Large cap stocks have huge daily trading volumes. This means investors can easily buy and sell without affecting the stock price much. Small cap stocks sometimes have lower trading volume, which can make it harder to enter or exit a position quickly. This is important to understand if you plan to react fast to market changes. Another key difference is attention. Large cap stocks are constantly covered by news outlets, analysts, and financial experts. You can find tons of information about them. Small cap stocks? Not so much. They don't always get media coverage. They don't always have analysts tracking them. Sometimes information is limited. This lack of information can make them harder to research, but it also means that smart investors who do deep research can find hidden gems before the crowd discovers them. Let me ask you this. Do you enjoy researching companies deeply and spotting opportunities before others notice them? Or do you prefer well-documented businesses where everything you need to know is easy to find? Share your preference in the comments. Your answer reveals a lot about what kind of investor you may become. One of the most fascinating aspects of the small cap versus large cap debate is how investors emotionally react to each type. Small caps can create excitement, anxiety, hope, and fear all in the same week. Large caps inspire stability, long-term thinking, and confidence. That emotional difference often shapes a person's investing style more than they realize. If you're enjoying this video so far, make sure to like this video, subscribe to the channel, and share it with someone who's thinking about investing. It helps the channel so much, and it allows us to keep creating content that makes finance easier for everyone. Now let's talk about performance. Historically, small caps have sometimes outperformed large caps during certain economic cycles, especially during periods of recovery or after recessions. But during uncertain or declining markets, large caps often outperform because investors flock to safety. Understanding this cycle can help you choose the right mix depending on what the economy is doing. Think about this. If the economy were recovering from a downturn right now, which type of stock would you lean toward? Would you chase growth or rely on stability? Leave your thoughts below. I love reading how different people approach these big decisions. Another difference worth understanding is innovation. Small caps often innovate faster. They take big risks. They try new things. They disrupt industries. Large caps innovate too, of course, but usually at a slower pace. They're careful because they have more to lose. So if you're someone who believes in investing in the future, small caps may excite you more. But if you believe in investing in strong systems, established brands, and proven business models, large caps might feel like a safer home for your money. Imagine, for a moment, your ideal investment journey. Are you hoping to multiply your money quickly, knowing the ride won't always be smooth? Or do you want slow, steady growth that builds quietly over time? This isn't just about stocks. It's about who you are and what you value. And that's why understanding small caps and large caps is so important. As we come closer to the end of this video, think about everything we've explored. Risk versus reward, speed versus stability, youth versus experience, innovation versus reliability. Both small cap and large cap stocks offer unique benefits. And the truth is, many successful investors use a mix of both. It's not always about choosing one side. Sometimes it's about balancing them in a way that matches your goals. If you've ever invested before, which type of stock gave you your biggest lesson? Small cap or large cap? And what did you learn from that experience? Share your story in the comments. Someone else might learn from your journey. And if you found this video helpful, informative, or inspiring, hit the like button, subscribe to the channel, and share this video with anyone who wants to make smarter, more confident financial decisions. Your support helps us keep creating content that turns complex ideas into simple, enjoyable learning experiences. Remember this: investing isn't just about numbers. It's about understanding yourself, your goals, your comfort level, and the future you want to build. Small caps and large caps are just tools. The real power lies in how you use them. Thank you for watching, and I'll see you in the next video.